Hello, and welcome to Land Title Talk, where we encourage you to text in or email in your questions or comments at 904 501 4481, 904 501 4481, or you can email us your questions or comments at Stephen, Stephen, at golandtitle.com. Again, that's Stephen at golandtitle.com, where we can discuss your questions or concerns. I'm Steve Collins from Land Title of America. We have Julie with us from Land Title of America, and we always, as always, have our special guest, Rusty. Where are you, Rusty? He's walking in the door.
Coming.
So, normally we say, Rusty, what's going on in your world? In this case, Rusty, are you even here? But today, and I knew he was walking in the door, we wanted to talk a little bit about, and I actually gave him a heads up on what we're talking about today, which I normally don't do I?
Nope.
No. But this is Rusty Collins from the Law Office of J. Russell Collins, affectionately known as Rusty Law. And he also goes by the name of Brother, when I'm lucky. And so what I wanted to talk about is these advertisements or advertisements that I'm seeing in reference to one's called Home Tap. And then the other one, I can't even pronounce the name of it, but there's these different programs out there that are basically offering people an opportunity to purchase their equity. Is that right, Rusty?
That's what it said to be.
Okay.
It comes down to the paperwork that does the closing. A friend of mine several years ago did something like that, and it came across as an option agreement. It's a finance option purchase agreement, and it's been a little bit, so I can't remember all the important points, but basically you can buy back their ability to have an interest in your home later.
But they pay cash up front for that right.
Correct. So if it's set up as a debt, a deed or anything to secure a debt becomes a mortgage. So on the closing of this document, when my friend did it, and I did the math, and I was able to come up with an idea of what it would actually cost him, and that made sense to him.
I don't know how it can make sense. You've got to tell me how does it look? Because again, I don't have any experience with it yet. I've not actually seen the documentation. We've not been asked to close any of them, because I guess we could. Is the current owner selling their interest to another, or are they selling an option to another?
Well,
because really what it is, these are big companies buying the right to either own the home or the future right to own the home.
I believe, at least for now, because I haven't seen any of these new ones that have just shot up in the last year.
Well, your friend,
this was from 2022.
Oh, is it that old?
Yeah.
Oh, I didn't know that. Okay, I thought it was one of the newer ones that we've seen, like with Home Tap.
Right.
Okay.
And I don't even know if Home Tap does things in their own name.
I don't know either.
But the thing that people need to do is they need to get somebody qualified to look at these documents, because the documents, that's where everything, that's where the gotchas are. And I do believe they've probably had something where it's been vetted somehow.
I don't know how. I mean, I think these things some attorneys are going to come up with a way of proving that all these are mortgages.
Well,
and if
this one was actually a mortgage, okay, there's an underlying agreement, but the way they positioned it was a mortgage.
And we talked a lot about this on our last show about
we've
usury,
talked about usury,
and if they're getting a particular interest, Rusty, if they're getting a particular interest in the property and they're buying that interest at a discount because a person's desperate, needs the cash up front, but then in order to save your home in a certain time period, you got to pay that back, and it becomes greater than 18%.
Well, right. So if you look at it like a reverse mortgage.
Okay.
Okay. Now, on a reverse mortgage, you get interest on interest. However, your interest rate is it's usually variable, and it's it's not going to go over 18%. Okay, but you are if you could do it as a younger person to where you don't make a payment, but in 10 years, between now and 10 years from now, you're going to sell your house. So if you could get some cash today and not have to make payments on it, knowing that you're going to sell it in a certain later. Now, if it's a loan, you have to pay a pre-calculated situation. If it is somebody buying an increase in the future, buying an interest in the future value of the house, well, we don't know what that future value is going to be because sometimes markets are volatile.
You're right. What if it goes down?
Well, that's just it. I don't think I'm sure their value in the house, what they've given you, is already figured the potential for reduction in value. I mean, there was houses that just crashed bad during the mortgage crisis, so they would have to figure out what that would be. What can they give you? So if you're at 70% loan to value, you probably can't get one of these loans. But if you're, in your 60s, you've had your mortgage for 22 years or 24 years, well, your original balance has gone down quite a bit. And my wife and I aren't old enough for a reverse mortgage. We could do something like this, pay off the mortgage we have with it.
So you have no payment.
So I have no payment, but if I know I'm going to pay, know I'm going to do something in several years from now and move, that might make sense depending on how this is calculated.
It's going to eat up your potential equity in the future. That money you would use in the future is going to be spent now.
Correct. But the benefit, the potential benefit, again, I don't know what the math looks like yet. The potential benefit is if I had a reverse mortgage, my balance would go up every month, right? Because the interest accumulates the principal, and then then they get interest on interest, so it's going to go up. And after a while, it really goes up, like savings would, exponentially, depending on what rate is being used. And
we're talking about people's normally their final home. This is why a reverse mortgage is for elderly people.
Right.
It's something I can't get at 58.
No, because you'll live too long.
You actually can. There is a program in the 50s now.
Am I 57 or 58?
You're still 57. Because
You'll
I'm
be
older
58
than you.
this year.
Okay. Crap dog.
By a little bit.
I keep forgetting. I don't want to say 58. I'm not 58 yet. Dang it. Slap my mouth. But, there is. So you're telling me there is a program.
There is a new one.
For reverse mortgages?
Mm-hmm. Mr. Reardon can help you.
Oh, you are crapping me. I have to get him back on the show then.
Okay.
You must, but then you probably don't have any, you can't hardly have any mortgage on the property because, again, we're looking at people, the calculations are typically based upon you living to 100.
Well, I just want them to give me a reverse mortgage because I'm a nice guy. I don't want that payment anymore.
Well, that's great, but what's your loan to value?
Yeah.
And, what's it going to be in 40 years when you croak?
Right.
Say,
Yeah, that's 40. No, 60.
40, 43.
60. No, 60.
Well, if you're 57, you got 43 left, maybe.
Like,
Or they send somebody by to say, hey, nothing personal.
your time's up.
but
Yeah,
your
Logan's
time's up.
run.
Yeah, Logan's run.
Yeah.
So it comes down to what do the papers say? And I've not been able to see any of the papers, and I'm pretty sure they don't give them up too easy. And then doing the math.
Well, I want to see one in the public records. I want to find one and look at the nuances. I almost want to call them up and do a loan. Excuse me. There you go.
Application.
Not a loan. I want to fill out an application just to see what it's all about.
Well, the problem is that they look at where you are on your value of your house, what your house is worth. They probably say you don't qualify.
Yeah. Well, how do you know what my value of my house is and what I owe?
I know a lot of things.
He's Big Brother.
I'm your lawyer.
Good point. Good point. All right. So there's really not much we can talk on this anymore until we have more information.
Right.
I just think people need to be aware. These offerings, you know what? Attorneys are useful. Hate to admit it. He's pretty useful.
Well, on this one, when I looked at this for my friend, I was going to talk him out of it. That's what I was looking for. Looking to do. And I did the math and I did the projections, and I'm pretty good with financial math. And I said, if this is your intent, this may not be a bad way to go. So
that could sound morbid, by the way.
Well, no. This was not a bad deal for my friend, and it worked out within his financial plans. So I don't think that deal was for everybody. I don't think that reverse mortgages are for everybody who qualify. Okay, it's just a tool, one of many, and sometimes the HELOC's a good idea to have a line of credit if you do it right. There was a product out for a while where you your payroll you used your mortgage line of credit like a checking account, where your paycheck went in to that mortgage balance, dropped the mortgage balance, and then you'd write checks on it, and then so you were getting the benefit of how your payments time out.
And plus, you also the benefit of a tax reduction, the interest.
Right, but the point is your paycheck goes in, you write your checks out, and so hopefully there's a timing, because remember, you're paying interest on a per day basis, and at 6% on a $300,000 loan, 6% is going to be $1,500 a month in interest for a whole month. So divide that by 30 days. So that's $50 a day. If you drop the balance a little bit, it's less that you're paying. And if you pay a specific amount every month, there might be some benefit. If you have or strict enough with yourself not to blow
I mean,
it.
it's essentially a 10-year loan, because from what I'm reading, it's either when you sell the home or within 10 years, it needs to be paid. So
Right.
if you know you're going to sell it within 10 years.
Then it's a mortgage, Rusty. We need. I'm going to give you a homework assignment. We need to figure this out. This is something I want to talk about on this show. I want people to understand it better, because it's becoming a big marketing. There's a big marketing push
and that's
for
just it. So maybe what it is because it's not a loan that's due.
But it is.
Well,
the 10-year
Well,
loan,
put it
basically,
this
Julie,
way.
right?
We'll find out when one of these goes
I
bad.
think it's kind of like a HELOC in a way.
In
Because
10
you
years,
are
we'll
taking
find
the
out.
They're
equity on
buying
your home.
equity. It's weird how they're wording.
They are
this
buying
thing.
the equity, and you are taking a gamble on the value of your home and the interest rate, because
The
they
question
can
then
actually
is,
really rake it in.
what
on that,
happens
too.
if your
I almost
home
took one
value
of
goes
these
down?
out.
Is it really a loan? If the home value goes down and you take no hit, it's not a loan.
Yeah, we're gonna have to look into this.
Okay.
But that's definitely a homework assignment for you. I want you to look into it, Julie. I want you to look into it also.
I am.
We'll bring that show up. We'll bring that up on our next show, and we'll get down to the nuts and bolts of what this really is, so we can have a better understanding. But the key is, to me, is don't do it without talking to an attorney.
Well, I think, don't let the salespeople tell you everything you need to know. Okay.
Right. That's a good point.
There's got to be some controls in there. I can't imagine the Consumer Finance Protection Bureau just turning a blind eye,
Right.
and this not being something that they would look at. I'd have to just see how it's.
Well, Consumer Financial Protection Bureau has lost a lot of its power.
And I kind of like that. So,
Yeah.
but here's the thing: if it's really an option, then you're giving them the option to purchase something in the future
At today's prices, I believe.
at a specific price.
Right. Yeah, we'll look into it. Another topic I wanted to talk to you about, and I think we've talked about this before on our show, but unfair enrichment, unjust enrichment.
Unjust enrichment.
We've talked about that, haven't we?
I think so.
But I want to bring it up again just to be clear on a point. If I own a lot, okay, and a survey goes out there and surveys my lot by accident, and a builder builds a home, okay, I have sentimental value to this lot, the location of this lot. I had dreams of building my home there. This builder builds a nice home there. I go to look at it and I'm like, wait a minute. I didn't pay to have this home built here. But by the way, thank you very much. I own the lot. And when you own the lot and somebody builds a home on top of that lot, who owns the home?
You do,
Okay.
but they should have a claim for what's called betterment.
Okay.
And it's based upon like unjust enrichment,
Okay.
because the classic idea behind unjust.
But what if I can't afford what they're saying? I mean, you think about the dilemma. I'm saving for the future. When I get old enough, I guess at 57, when's that going to happen? When I get to my plans are at 65. I'm going to build my dream home here. And by golly, somebody built a house there by accident.
And they were trespassing the whole time.
And they were trespassing the whole
That's
time.
a builder fairy. They've brought you the house.
builder
You get
fairy,
to keep
yes,
that.
I like it. Merry Christmas to me.
Yes.
I can't afford that house now. I can't afford it till 65. When sometime pension comes due, or whatever the story is. Or I'm going to kill off my rich brother and I'm going to inherit all his money. Whatever the
I have no worries then.
What does a person do like me? I want to talk about not the person that built the home in the wrong lot. I want to talk about the person who owns the lot where the home's built. And now he's got this house here. It's a nice house. I'll accept the house, but I didn't pay to build it. So now what?
The concept of betterment is based upon unjust enrichment. And unjust enrichment is a concept in law when you don't have a contract, okay?
No,
There's
they
no
were
agreement.
trespassing the whole time.
Right. There's no agreement, and I confer a benefit to you that you have accepted. You've received the benefit of it, and you've accepted the benefit, and you haven't given it back to me.
Well, how have I accepted the benefit?
But I'm giving you the concept.
Give me the concept.
We'll drill down.
I apologize.
And so I can appreciate the benefit. And it would be unjust for me to keep the benefit without paying
In the
for
case
it.
of my story, it would be unjust for me to keep the benefit.
To keep the house, move into it, and say thank you very much. You can't do
You
that.
can't move the house.
Probably not.
There's no
You can make
probably.
them tear down the house.
Why would I make them do that?
You want it nice and clean and whatever.
No,
Take the house back.
Listen, fine.
Disassemble it.
Well, if I got my attorney, J. Russell Collins, and again, I'm not saying this is a fair approach. I'm just saying I want to exercise this approach. I get my attorney brother, and I go to you and I say, Rusty, they're trying to get me for betterment, unjust enrichment. So we're going to call their bluff.
Well,
And we're going to say to them, then tear the home down and move it. Tear the home down and remove it.
well,
Or just give it to me.
I can tell you that a court of equity, which is where this would be done, there's a difference. There's a court of law and a court of equity. They're in the same place, with the same judge. Okay, but a court of law, you could have a jury.
Okay.
Okay, and a court of equity, you don't get a jury.
Okay.
It's going to be very hard for the judge to let you keep that. Now, if you say, listen, you're a trespasser and you have harmed my property, and my
Tore down the
property,
tree that I wasn't going to tear down.
well, my property is unique. There's no other piece of property like it on the planet. And every piece of property is like that. No other piece of property has the same view that you have or is located on the earth as yours. Okay. So I can say, listen, I'm not going to keep the benefit, but you got to move it. And you need to put it back like it was because you were a trespasser. And I didn't know you were there. Now, if you just let somebody build on your property, that's a whole different animal.
I didn't know it happened. For this story, I didn't know it happened.
Okay.
I'm hiring you as my attorney. My goal for you as the attorney, which sounds pretty bad here, I still want to end up with the house without having to pay for it.
Well, good luck.
Well,
I'm not
but-
promising that result.
Well, I know you don't have to promise that result, but if we take the approach of move it then, or
Well-
just give it to me,
Yeah. Well, that just becomes the thing.
because I need.
Well, how about this?
You move it, and you got to put back the tree. I mean, that was a 20-year-old. I mean, not 20-year-old. 100-year-old tree. Put it back.
Okay, but that 100-year-old tree does have a value.
Right. And the house is going to be cheaper than that tree.
Well,
because that's probably a priceless tree. No,
No,
seriously.
I know
you
you're
can,
right.
No, you can put
I
a
smile
value
because you're right.
You can put a value on it. Somebody can come
Yeah.
up with a value.
Mhm.
Okay. So, if you did this by trespassing,
Excuse me. I'm the guy.
if the builder did it by trespassing, which would be quite difficult. Hopefully, somebody's got a liability policy. It comes down to dollars and cents. You've bettered my property in the marketplace by putting a $200,000 building on it, right? With whatever it takes to get the house done. Okay.
if you're lucky for 200,000,
Okay. Well, I got to pick a number. So you've got to put, okay.
pick 300. Sounds
Okay.
good.
$300,000 house
500.
on my lot. My lot was worth 150 beforehand.
Well, no, it's waterfront.
Okay. Well, okay.
Hey, if we're going to dream, we're
We're
going to
gonna
dream
dream.
big. Come on.
Listen, I want my story to be right. The whole reason I want to
Okay.
build in the 6-pack is it's got a waterfront. I'm going to be fishing for little bass in the backyard.
Okay.
I'm going to put a little dock too.
Well, how much have they hurt your property? If they had to take it away, what's the damage? If you had to tear it down, what is the damage that has been done to you because of the trespass?
Certain
They
trees.
took out trees
Yeah.
that have a value, right?
Yes,
Okay. And they're trees that you would have not have taken out.
correct.
And you can prove that.
Correct.
Okay. So you've got that. And so if we're looking at equity, okay, in a court of equity, the damage that they've done to you by trespassing has a number.
Yeah.
And it can be calculated by people who know how to make those calculations. And the value of what they've done, the benefit they've granted you has a value. Do the math, and there's the difference. Somebody needs to pay
So
somebody.
you're telling me in the end, a judge is going to pretty much force the issue. I can't just say, then take the home away.
You probably could.
And I'm just saying as a negotiator,
I'm not taking,
listen,
well, and it comes,
think as my attorney here.
Okay.
The goal is, and they don't know this,
is that the hill you're willing to die on?
the goal is to get the house and not pay for it. But I'm willing to live with them tearing it down and removing it.
Okay. So he who cares the least wins.
Then I would win because I don't care if they tear the house down and take it away.
And with that house,
I'm taking it as an opportunity to take advantage of a situation. Okay. And so I don't care. Tear the house down, move it, put it back the way it was, and give me my damages for the tree and the damages to the property. Okay.
right. And maybe they can put the tree back, or make
Or in the end, I
property
might
work.
say, all right, or, you can leave it there. That's fine too. It's going to cost you more money to remove it, or just leave it there. Here's what I'll do. I'll accept the house and I won't make you remove it and have that expense. There you go.
And that might be a good deal for them.
Right. I think it might be.
It could be.
It is just an interesting dilemma. And we're not talking about something that's never happened, by the way.
Oh, it happens every once in a while.
It happened in Palm Coast. It happened in St. Augustine. The situation in St. Augustine and College Park was a little more difficult because it was property line disputes.
Yeah, but well, it wasn't property line disputes. It was the surveys were wrong, and
Way wrong.
somebody built a house on me and your lot
But
because
the
they're.
issue, well, the issue in Palm Coast was got the wrong block number.
Well, they got no, it wasn't no. Oh, okay.
Palm Coast, yeah, wrong block.
But here in College Park, they because it was you had mostly vacant lots that were being built on. Okay, that people owned, and all of a sudden there's a house there.
Right.
So the judge and the underwriters, the title insurance underwriters, got together and redrew the map for the plat,
Right. They replatted.
which is the weirdest thing I've ever seen.
It was pretty cool. It was a good way to work out the issue.
Well, but I had a client who
Wanted a free house.
wanted their free house.
Dang it.
You know.
No.
So I think there was a mortgage, and it was just weird.
Yeah. They
So-
just replatted everything.
And actually, that
It worked out
the
beautiful.
amount of work it took to do it was amazing.
years.
I'm sure it was probably cheaper for the underwriters to do that than to pay the claims.
Oh,
the
yeah.
mortgage
Oh,
companies.
Yeah,
Mhm.
they've been a mess of them. That's why when we issue title insurance as an endorsement called the Alta 9 endorsement, most
And the banks get it.
the banks get it. Buyers don't for some reason. We make sure your buyers do, but yeah, they would have had a lot of money.
Because here's the thing: everybody still owned their property. They were just living somewhere else.
yeah, they live on somebody else's property. Yeah,
Okay.
the house wasn't on their lot.
Yeah,
Nope.
that was crazy.
It's in the
mess.
middle of the road.
All right, so another issue I want to move on from, and,
Okay.
we may revisit this because I think it's just such an interesting topic. Because unjust enrichment or betterment, it can fall into a lot of categories, which are
Well,
very interesting.
Unjust enrichment is a big deal in small claims cases for credit card debt when a debt buyer buys it and nobody wants to bring in the credit card agreement because nobody can remember which one it was and they get updated. Okay. So they said, well, we bought, what I think is funny is when a debt buyer says we granted a benefit to the defendant. No, you didn't. I don't know who you are. How did you give me a benefit?
But they use that line.
They do, and it's just funny when they do. Or they say, American Express granted you it wouldn't be American Express because they do their own, but some Visa company granted you a benefit and you didn't pay them, and we bought that debt.
Yeah, the benefit was to the credit card company, not to the
Yeah.
debt buyer.
Right. So
And they buy these debts for pennies on the dollar.
they do, and it is a national secret as to how much they actually pay.
Yeah.
Okay, it'd be easier to get the nuclear launch codes than to get those contracts.
All right, but let's talk about something different. So I like examples. It's just,
Mm-hmm.
what do you do in a situation, Rusty, where you have a mortgage payment, you're making that mortgage payment to Julie. Okay. Julie, sorry, you're going to have to die in this situation. Sorry.
That's okay.
You're making mortgage payments to Julie. You have a private mortgage. Okay.
Oh, if none of her heirs figure it out, that's a great day. We wait 20 years or
Well-
5 years or whatever.
What they do is Julie dies, and then Julie's daughter says, here's your official notice, make the payments to me.
Maybe I need more.
What do you need?
I need to know that she's entitled to enforce that note.
I'm an heir. Oh, well, not me. The daughter's an heir.
Mhm.
She's,
Okay. Well, how many daughters does she have, or how many children
she
does
has
she
one
have?
daughter
And
Does
one
she-
son.
Does she have
and one son.
one daughter, one son?
That I
Well,
know of.
is there a will?
No.
I'd be
Well,
wanting
but
to
what
figure
would
something
you
out.
do? Julie's been your contact, right, this whole time. She's introduced the daughter, let's say, to this scenario. You've gotten to know the daughter. You've built a relationship with trust because Julie got sick. The daughter's been communicating with you. The daughter, I mean, you even feel cordial with the daughter. And the daughter says, hey, sorry, I hate to give you bad news. Mom's passed on. Just make the payments to me.
Well,
You have a relationship of trust. You trust her.
no, I don't.
Well, yeah, you do. You've talked with her. She's a good girl.
Yeah, she could be wrong.
What would happen if you start making the payments to Julie's daughter?
If, in fact, Julie was not the only person
Okay.
entitled to the payment, and there was nothing that gave me notice of a change, I would probably be protected. to
No,
a
she
point.
gave you notice. She sent you a
and
notice.
I was the only one on it because I'm independently wealthy because I work for Land Title.
Okay, so
Exactly.
then you're a liar. Okay, so
But Julie's daughter,
but Julie
Same-
has, but there's a son too.
Julie's daughter, who you've been in communication with,
Mm-hmm.
who obviously Julie's been communicating with you, the daughter writes you a letter. Make the payments to me personally and give you notice.
That's
Mm.
not enough, I think, to protect you 100%.
What would you do?
I would want some kind of indemnification from her, and I'd want to have a receipt each
I'll
time
give
I
you a
made a
receipt.
paper. I'd want to.
She'll give you a receipt,
Number one,
excuse
I'd
me.
want to know that there's not a will that gives the mortgage to somebody else. I'd want to know certain things. Okay.
So let's say all that was in place you know my daughter, you make payments to your daughter, and now my son pops up out of anywhere
The
who
son
was
may have-
50-50. Doesn't he just deal with her, not him?
That would be what I think would end up happening in a court. That'd be my defense anyway,
Mhm.
because I have nobody else to talk to. I didn't even know where he was. She got the $1,000 payment each month on time. She gave me notice that she's in charge or whatever. I don't have to do a whole lot of checking. It does make sense. Okay. It's either that or I'm going to have to, I don't have another place to put the money. So if I pay somebody that looks like they're entitled, I should be able to be protected.
I don't
Or
know.
better yet,
I don't know, Rusty.
you know what I'd end up doing?
What?
I'd probate that estate.
But you're an attorney.
Well, but that's just it. I can make a claim on the estate, or I could. I have standing as somebody who needs to pay. I have standing to get the estate probated and get a judge to tell me what to do.
And I'm wondering if you're right. If you're protected by sending the money to the daughter.
I think you remember foreclosure
Because,
is an equitable.
Here's what I didn't tell you.
Well, liar.
Well, but the whole point of me doing this is to prove a point. Okay.
Okay.
I don't want to give you all the evidence up front. What you didn't know is that Julie does have a will.
Okay.
Julie gave the daughter a house, but gave the son the mortgage.
Right. Well, I think in a court of equity that might get worked out,
Well, son comes to you and says, "I'm foreclosing."
and I'd be defending, saying I paid the payments every month, and you didn't come forward earlier.
Well, that's a good point.
Again, it's a court of equity. And if Julie had the note, she's entitled to enforce.
Well, her son did.
I mean, the son or
Yeah.
daughter, whatever, whoever has
No,
the
the
note.
daughter doesn't have it. Daughter was just sneaking in there getting the payments.
Well, I'd want to
Because-
know, we want to know who had the note, who's entitled to enforce that note. But then I'm a lawyer and I think that way. Okay, it could be some wino who picked the note up on the street because it fell out of a purse. That person then has pretty much the ability to enforce it.
Possession of the note's important.
Well, yeah, depending on a lot of things, but yeah, it's important. It's a de facto. You know, if it's a negotiable instrument, okay. If it's got all the regular mortgage note, it's a negotiable instrument. Person in possession.
At any point, do you tell a person who's saying, "Hey, I represent the family," or let's change it to a trust? You made a mortgage to a trust, okay? Julie, trustee of the Julie Settle Land Trust.
Mhm.
Okay, Julie dies. Somebody asserts they're the
Somebody should
successor.
have a copy of the trust.
Well, okay, but if somebody's asserting, "Hey, I'm the successor trustee,"
Okay.
okay, and you're saying as long as you're making the payments to whomever tells you to make the payments to, you're safe.
I'm telling you that you got to do some due diligence.
Give me an
Okay.
example.
Well, okay,
What
well-
can you get from a? No
Okay,
one's
there's
going
a
to send
trust.
you a copy of the trust. They're not going to send you a copy of the trust. What if they don't send you a copy of the trust? What if they say, "I'm not going to send you a copy of the trust"?
Then
Does that give you the right to say, "Well, I'm just not going to make the payments"? Then
I would want, number one, if you don't make the payments, you need to put them somewhere. Okay?
registry.
Right.
No,
No.
how are you going to put it in the registry?
Tell them if there's a dispute.
Don't you just put
There's
it
not a
in
dispute.
put it in escrow?
Well, if somebody's asking for the payment, I can't verify they're the real people.
Well, that's why you would just go ahead and probate the estate or
See,
have a court
yeah.
take over the trust and tell you who to make payments to.
How do you get all that? What do you do with the 6 months before that happens? What do you do with your payments? Give it to some stranger? So
I would,
what
depending
do
on
you
the
do?
situation.
Are you going to sit there and say, "No, I'm not making my payment"?
I say, show me the proof and I'll give it to you. And I'd be telling them this
Okay,
in
but
writing.
there's like, "No, I'm not going to show you the proof. You give
That's
it to me."
fine. Then come foreclose. Let's go to court.
Gotcha. That's what you need to do.
But I'm going to hold on to that money and not let it get spent.
Hmm.
A lot of
Because-
our mortgage payments now are being automatically taken from our checking account.
Right.
Okay, and that I think there's an element of protection there too,
Well,
because the current
but you're
lender,
going from one bank to another bank and
the current lender who's collecting those payments will then assign that
well,
and
they'll
then
transfer the
transfer
servicing.
the servicing, and so that stuff happens pretty seamlessly. But back in the day,
But the problem with that is then they don't transfer the insurance information and then they start force placing you.
Yeah.
if you don't give them a new insurance policy
Well,
in 2 minutes.
that's another issue. But let's stick to this payment
Rusty, I'll
issue.
help you out. My ghost will come back and tell you.
That's fine.
Pay my son.
Get the Ouija board out.
But what I want to warn people of is that if you're writing a check every month, and people still do that
Well, every once in a while you find somebody with a paper check.
every once in a while, it's so weird now.
Zelle is
what
pretty
is
much
paper
What is a
check?
paper check?
What's
I know
his
Zelle-
paper check?
the world is ever changing right now, which is sort of cool. I like it.
Well, Zelle's made a big difference.
Oh, gosh.
Because now you can transfer money around and you're not paying
yeah.
2.5%, 3%.
My wife, her laser printing business does mostly Zelle, I think, almost now.
Probably.
But when you get a notification from somebody that says, make your payments to here now, we purchased your mortgage. We are now your new servicer.
Well, are we
Make your
talking-
payment. Oh, and by the way, we have not set up your auto draft payments yet, and we will set that up with you. But until then, please make your payments to XYZ Mortgage Company at the address 1234 somewhere in Des Moines, Iowa.
Well, that's a location that's used quite often
Mhm.
somewhere. You're supposed to get a goodbye letter and a hello letter.
Okay.
If I just get a hello letter, I should be able to call the old servicer and say, did I miss the goodbye letter? Because typically what happens is
Mhm.
you can't see it. Can't see it anymore. Or it shows a zero balance all of a sudden because they've transferred it. So you can, don't get too excited.
Unjust enrichment.
But there's ways to verify this information with the service. Okay. The people who are in the business of this do it all the time. If you've got a private mortgage, and I used to buy and sell lots of private mortgages, but we get the seller of the mortgage to sign a goodbye letter that says, I have sold my mortgage too. Effective with the payment due on. Please make your payments at this address.
So that's the important part. Get a goodbye letter, get a hello letter.
You should be able to verify this information. You're talking about the death of a mortgagee. It's not a company, so it doesn't,
Right.
it expires, the person dies. Okay. Well, the kids whoever inherits wants whatever. Okay. You have a right to find out. If you know the person who died and their family, you might be able to figure
But
it
if you
out.
have the options, and we're going to end the show here really quickly, but I just want to give you the option. Option A, don't make your payments, or option B, just make your payments to the person that sent you the letter saying make your payments here.
If those are the choices, I'd be looking at the letter and figuring out some things.
Okay.
Okay.
I gave you option
Okay.
A. I gave you option B.
I
There
would
wasn't
not
an
want-
option C.
I'm not going to tell you to unilaterally every time. Don't make the payments until you get something. Okay. Because it might be 100% legitimate, and you don't want to end up going to court and being on the wrong side of that.
No, that would suck.
Okay. Now, you should be able to do some reasonable due diligence. Okay. Like, hey, well, first of all, if somebody dies, if there's an obituary, you can see who the heirs might be. Okay. Usually because they tell the truth on that. They might not tell you the truth at a consult about the estate, about who the kids are.
But see, the
But they'll
confusing
pay.
thing is, Rusty, is Will can will that mortgage to
Oh,
anyone.
I've had surprise wills show
Yeah,
up.
I mean, for
Mhm.
heaven,
It could will
It
to
it could be
the church.
Julie's daughter could be asking for the payments when, in fact, what Julie did is willed it to a church, and the church just took time to get their payments together.
Well, but then wouldn't that be theft?
that stops people from doing things, right?
No, but it,
That stops you from being a victim because it's wrong.
no, but it
Okay.
puts the daughter in jail, and maybe she'll fix something. There might be some other equitable things that can happen.
By the time people get around to finding that out, they're long gone in Tahiti somewhere or whatever.
Well, yeah.
Okay, so
But I'm talking about family members though
I
that
get it.
don't disappear.
I get it. You would hope so.
And for the record, my daughter was not harmed in anything in the record of this show.
I'm just
She's
saying.
alive and well and honest.
The what?
And so is Julie, by the way.
So I'm still alive.
Julie didn't die.
yeah.
So
Sorry, Julie,
still
but we had
alive.
to use somebody as an
That's okay.
example. Was
when in doubt, get some counsel.
I agree. And but I've been asked this question. That's why I brought it up to you. I had somebody call me up and says, "Man, the person I was making payments to, they passed away, and now someone's calling me and saying make the check payable to them personally." My counsel to them, which I'm not supposed to give counsel, but I did. Make it to the estate of.
That would work.
Took us
Right, 'cause
20 minutes.
Shouldn't there
to
be
get
a
to
bank
that
account
answer.
set up for that, for the deposits?
Well, here's
of
the problem.
estate of?
Nobody can, if unless there's a personal representative.
Well, let me interrupt you, Rusty. I told them you make it to the estate of the deceased person, and you freaking write the check, make sure or I told them to do a cashier's check.
I'd get something that
Right.
gets out of your account.
Yeah, and
Yeah.
send it to them. And until they prove to you through the courts that they are an heir or that they're the PR, whatever, you make your payments to the estate. And that's the counsel I gave them. And I was just curious to see if
Well, see, that would be a good way to take care of it.
just tell me how smart I am.
Hey, every once in a while. Even a blind squirrel can find a nut.
A
Hey, you
clock
know
is
what?
right twice. A broken clock's
Yes,
right
that's
twice a
right.
day.
But so here's the thing. If you do that, guess what? The daughter's not going to be able to cash the check. So she's
not my
going-
problem.
I know that.
Right.
So she's going to
She's going to have to do the estate work.
she's going to have to get that figured out.
Yeah, because
And-
you know what they say on the other end. This is $100,000 mortgage. It's the only thing they add. I don't want to spend $6,000 doing a probate. You know, that's what you hear. So,
And I don't want to pay taxes ever again. We'll both be disappointed.
Whoopie-doo, yep. We're all
Okay.
just right.
So, but that would work. Okay. And if you had a trust, write it to the trust.
Right to the trust. Yeah.
Okay. There's
Yeah.
always a trustee, and trusts don't really exist, but that puts the burden on them.
Right. And I love that idea. I think it's how you deal with it.
That right there is the simplest way to do it. I just don't hate the thought of somebody having to open up a probate if they don't have to.
I get it. Rusty, how do people find you?
Please don't. I mean, 904-829-6600.
You can reach Rusty at 904-829-6600. You can ask for his assistant, Ben. You can always call me, Land Title of America, Stephen Collins, at 904-797-9600. Or you can reach me on my cell phone, which I would prefer. Texting's great, 904-501-4481. And Julie, we don't necessarily want people calling you, do we?
No.
Yeah. So just call me if you want Julie. She's awesome. She's a great help. She takes care of a lot of our marketing and does all these podcasts, and we appreciate her organizing this for us. But we've been Land Title. We've been. This has been Land Title. We appreciate you listening with us, and we hopefully will be back next week. Thank you so much.